All right, guys. If you're watching here on YouTube, Facebook, wherever it is, thank you guys so much for tuning in. We are sitting down and talking with Mr. Adrian Wolford. Did I say that right?
You did. Good
I did.
job.
Sweet. A plus for me. And in this one, we're going to be talking about day trading using other people's money and prop firms and kind of the systems and things that Adrian uses, and really kind of break that down. So, Uh, take it away. Give us a backstory, kind of where you're at, who you are, and a little journey up until now in your trading career.
Yeah. Again, thanks Eric for having me. For everyone watching, hopefully I can add some value with my thoughts. So a little bit about my trading journey. When I graduated high school, I guess that's a good point we can start. I moved to Hawaii. I was at the University of Hawaii where I got my undergrad. I started to dabble in day trading then. But the time zone was, it was a little difficult. I was having to wake up like early in the morning, supposed to be a college student, trading at like 3 o'clock in the morning, local time in Hawaii was a little difficult. But I
You
moved
just you
back.
just stay up from the night before.
You could do that, Red Bulls and, your beverage of choice were a thing in college for me. But, I was just trying to really, enjoy the college experience. So I couldn't really say I was the most dedicated day trader back then, but I learned about futures. I learned about day trading. So when I graduated college, I actually got a job, moved back to California. I got a job working for a local bank. And I really wanted to, learn how to do more day trading. And that's where I really started to learn that, while I think I am, above average IQ, it really is a different set of challenges, competing in the financial markets because, that's what I thought it was. It was a competition and I needed people to kind of show me the ropes. I tried to do, the free education piece like on YouTube and the various forums, but I needed somebody who had found the system, whether it was taught to them or they learned it on their own to kind of show me the ropes. Somehow I found, Major League Trading. And at that point in time, when I started to really take my trading seriously, I came across, Major League Trading. It was both you and, Jack at that time. And I was learning approach that I thought was, going to help me become successful. But ultimately I had to tweak it a little bit. And I really started to learn, your level system, which really helped take my trading to the next level. So fast forward, um, I go through all the various, challenges that an aspiring trader needs to go through, you know, discipline, money management,
The bad days.
FOMO. Yeah, trying to get, for me, it was like, man, at that time, social media was really taking off. So here I am, I'm sitting at my, my trading station, and like you're looking at social media, and you're like, man, this guy made $100,000. This guy's driving a Lamborghini. He has a mansion. But I don't know if it was really, if it was rented or if it was like who knows at that time, because a lot of it too was people were trying to exploit social media for their various business opportunities, and so I continued to just that period. And again, that's why I feel like trading's in a really good spot right now. At that time, it was really about like flash and how much money you're making, but you really didn't have traders really talking to you about like, hey, like this is the reality. That was the dream, and this is the reality. And so, I continue to refine my craft, but at this point in time, a couple of years have gone by, and I'm starting to get green time, I'm starting to get experience, and I didn't know it at the time, but I'm starting to, I would even say like subconsciously start to develop um pattern recognition. And all I really needed was um like and when I took your mentorship course was just understanding the levels. And that's kind of like how I got to where I am right now. A little bit of backstory about my trading. um but yeah.
Fair enough. So initially, did you ever start off on like the penny stock route, like back in college, or no?
No. So fortunately or unfortunately, depending on how you look at it, I like to say fortunately, I found futures, and I found futures very fairly early on. So I never really got involved in stocks per se.
Okay.
I had, some investments, of course, but I kind of came up, and I guess there's like a couple different ways you can come up in this business. It just really depends on your early on exposure. And so for me, I came up the future route. Again, some guys come up the stock route, trading shares, and then others come up, options. And but I came up the futures route, and I just always kind of stayed in that realm. I did try and do a little bit of options, especially after I took the options course. But I really just found that for the way I like to trade, I just stick to what I know, and that's futures.
Okay. There's no theta. There's no gray area.
Yeah,
It's just straight. It is what it is. Um,
it is what it is. Yep,
yeah,
a lot of leverage though. A lot of leverage.
a lot of leverage. Yeah, as we were just talking about. I mean, a couple $100 billion a day of notional value changing hands just on like the S&Ps alone, which is it's a big number. Like that's a B, like billions. Um, so
There's definitely a lot of institutional players in the futures realm. If you read like market wizards books, and I think a lot of people are probably going to watch our interview, probably read them. If they haven't, they should. A lot of those guys who are interviewed in that book, they're futures guys. These are hedge fund guys. They're running
or
CTAs, and
or
they're
girls,
trading.
Linda Raschke.
Yes, Lynn. Yes, yeah. She's a futures gal. I think she even came up though stocks or options though, and then
I
I
think she
think
came up
she did.
initially like way back in the day through options on the board. Um,
Yeah,
and then yeah, she's different.
she's awesome. Yeah,
Yeah.
she definitely is a good asset to the industry.
Yeah, I think it might actually be on the one of the videos I have here on YouTube of her. She was telling the story on like a Russell trade where she was trading Russell futures and she was down like $2 million or something, like initially coming into the day. Ended up like turning around and making like $4 million by the end of the day. So she had like a $6 million swing on Russell futures, which is just like, I mean, that's just stupid. Like,
Someone needs to do the math on how many contracts you're trading to
oh
have
my
that big
god,
of
yeah.
swings.
Her
It's got to
her
be at least 1,000.
her broker was eating steak that night for sure. The commissions on just that alone was, I mean, $6 million worth of trading profits essentially. Yeah, no, it's that's big moves. But
Yeah, but I
that's
think too and I don't know if it's still around when they closed the pits, but they had the full size contracts
yeah,
back then. So I know the tick and point values were like huge
I
compared to
think
what they are now.
they're either I think they're 10 times. I think they were 10 times what the either 10 or 100 times what the S&Ps are now.
Okay.
Because the what we have the micros now,
Hmm.
as of the past few years, which are a tenth of the size of a normal futures contract, um, which I do think is also good. I mean, when you
Yeah.
look at like the S&Ps, I mean, we're talking, it's a $50 per point move. So whereas if you look into the micros, it's only $5 per point. So if you are wanting to trade like your own capital and you don't have, you know, 10, 15, $20,000 worth of capital to put up and you're talking, 2,000, 3,000, I think that's
Hmm.
more of the area in which you should be in is the micros. Um, and the benefit of it not there's no pattern day trader. So if
Yeah.
you are in
Exactly.
the micros, like you're good with $2,000, $3,000 on those contracts, you know, which
Yeah.
as we
So
know,
I think the
people that day trade.
micros, and when I first started, trading, it was just the minis. They didn't have the micros. I
Yeah.
think the micros, that particular product, for those who are just starting out in the trading space, I think it's a huge benefit that you and I didn't have when we first started with minis, because it allows you to control your leverage a lot better. I mean, there's a lot of liquidity in the micros, so it allows you to control your leverage. And I'll even trade micros today. Like today, I traded. At one point, I had two micros on because I just was trying to control my exposure, and I was managing my risk. And I said, yeah, okay, I'm not going to make what I can make on a mini if this trade goes my way. But for me, I was really controlling my risk, and ultimately that trade ended up being a winner. But I didn't go back and look at it and say, oh man, I knew I shouldn't put a mini on. I was always keeping my my risk manager hat on, because as an independent retail trader, I'm the HR department, I'm the risk manager, I'm the trader. So I have my risk manager hat on, and I traded both minis and micros today. So it really helps even, people who are comfortable trading minis. It helps them manage their risk trading micros.
Yeah. I mean, I like them. There's a lot of benefit to it. I think there's a lot of benefits to futures as well. Um, one of those components obviously being that you can do that from somehow, some way. There's a kind of a loophole, if we want to call it, where you can make that transition over into a prop firm. Um,
Yeah. Mhm.
so tell me about that for you and kind of where that started with,
Yeah.
and kind of growing from there, the struggles, the challenges, how you overcame them, all those things.
So I trade with Apex Trader Funding. So the one thing that I really like about Apex Trader Funding is depending on your skill level, you can tailor it to your needs as a trader. So if you're just beginning, you can say, okay, and if I was to tell somebody like, hey, which way would I go with it? I would say, well, this is what I would do. I would get one of probably their larger accounts and just say, hey, just don't try and get funded through that account right away. Your sole purpose is just to, stay alive, stay afloat, and just continue to learn and develop your skills. So for me personally, I found it, and I could have even been in major league trading group, but there's traders out there. I'm not one of them who go out and they're trying to find the best, funding prop firm to, to link up with. But so someone else did the work and they said, hey guys, these are our findings. And like, one of the groups I follow, and I think it could have been yours, Eric. And I said, okay, let me give them a shot. And what I really like about, Apex, is they allow you to scale accounts as well as contracts. And that was different than what I was normally used to when I was starting in this business, because it was just you only scaled contracts. You didn't get to spread your risk out over accounts. So, I started, with 5 accounts. Well, I grew to 5 accounts. I started with one account, see if they were, trustworthy, if they were, if I wanted to continue to do business with them. Once I found out that, yeah, I like what they offer, I scaled to 5 accounts. From five, I went to 10. And from 10, I just made the jump to 20. So I trade 20 accounts from with Apex. And like I said, what I like for me is I like to spread my risk out over accounts. So when I'm trading one mini, I'm really trading, as we talked earlier, I'm trading 20 minis, you know? So that's how it allows me to control my risk. Because the one thing as traders is I think, everyone, is in this business because they want to make money. They want to make a lot of money. They want to make it fast. They want to take care of their family. They want to be able to afford, the luxuries of this lifestyle. Like for instance, I just went to Mexico. I went on a vacation to Mexico. That's what this lifestyle's, afforded me and my family. So again, with that said, is for me, I want to control my risk over the number of counts. So the one thing I think a lot of traders, for me, I shouldn't speak for everybody, but for me was swings in your P&L. Like you said with Linda, she had a multi-million dollar swing. Where I'm at right now in my trading career, I don't know if I'm ready for a multi-million dollar swing in my accounts. But I do want to get to. I do have larger goals and ambitions where I'm trading account sizes that can handle that. But for me, I think having swings spread over 20 accounts is a lot easier, right? Because if you're down $50 in one account, right? It's like, okay, it's $50. Well, yeah, you spread it over, 20 accounts. Now we're talking about some serious money, but your psychology wise, it's just like, okay, I'm down $50, right? Instead of being down $1,000.
Yeah.
But you have to ask yourself, and what Apex allows you to do is, do you want to be down $1,000 in one account, or do you want to be down $50 spread over 20 accounts? And for me, that was a lot easier for me to deal with. So some of the challenges that I had when I first started, and kind of one thing I want to talk to you about, and thing that I really did and helped me out is when I was deciding I want to make this like my career, my profession. Like, what do I need to do? Let me think about it in realistic terms. And the one thing that I came up with, because I'm a big sports guy as well, I said, well, the market's open for 6.5 hours a day. Right. But if you think about it, like, there's only 48 minutes in a professional basketball game, right? There's only an hour in a professional football game. There's only 90 minutes in a professional soccer match. Yet we're expected to be professional traders and trade 6.5 hours. And I said, that just doesn't make sense. So I developed, and I guess, this was just my way, a 4-quarter system. I only want to trade 1 hour a day, but I want to break it up into 4 quarters. Each quarter is 15 minutes. And so for me, and I kind of stole this from, like, I'm a huge like Navy SEAL guy. I was like, one thing about being a Navy SEAL going through buds was like, they always said, just make it to the next meal, just make it to the next evolution. For me, when I was going through Apex, I was like, just make it to the next quarter. All right. So trade the first 15 minutes, make it to the next quarter. Okay. Now make it through quarter 2, make it through quarter 3. And then after quarter 4, I was done. So I broke it down into quarters, because at the end of the day, you're trying to, you have to survive these accounts. You can't just, blow it up. So I had to wrap my mind around something that I can understand. I was like, okay, just make it to the next quarter. That's when I was, when I had that huge run up in January, I made $100,000 in a month. That was my mindset. Just make it to the next quarter. Okay. I made it through the first 15 minutes of the day. Okay, now let's make it to the next 15 minutes of the day. And so on and so forth. And at the end of the hour, I was done. And that's something that really helped me. And hopefully that's a technique that can help some people who are watching our interview today.
So I've never thought about it like that, like at all. I've never. I don't know. I mean, I love the analogy. Like it makes total sense. You know, I got a feeling that one's gonna stick with some people. So that's probably up till this point. That's probably the highlight of the takeaway for me, at least. Um, I really like that. Like we talk about all the time just how many bars there are, like how many, like you said, 6.5 hours in a day, which gives us 6.5 hourly bars, and then every hourly bar has 4 15 minutes in it, and then every hourly bar has 12 5-minute bars in it. But I've never thought about it in the sense of kind of breaking it down into uh, just that hour time limit and the quarters, and keeping all that in check. So I like that. I really do like that. That was good. But we're not gonna just like we're not just gonna gloss over the fact that you just casually dropped in, like, oh, I made 100 grand in January, and then you just kept it rolling. So let's rewind for a second and go back to
Sure.
that. So in January, you're trading 20, 50K accounts, right, through Apex at that point.
Mhm.
So tell me, because I know you sent me a DM, and you made it like you were getting close on the last couple of days in January. Um, like any standout trade, any big drawdown inside of that, any kind of lessons learned?
So there was no big drawdown. For me, it was really just consistency. So one thing for me, I have a daily goal. So every day, I have a goal that I want to make. Now, what I found, and which I think a lot of people can um, resonate with, is that the market affords you an opportunity to make as much as you can in 6.5 hours. But what that comes with is a lot more exposure, a lot more risk. So for me, it was just about, hey, I just want to make my daily goal. And within that daily goal, and so for me personally, my daily goal is I want to make $500 per account, $10,000 a day. So within that daily goal, though, I also break it down to, okay, I want to have a minimum. So that's my maximum daily goal, right? I also have a minimum daily goal, which is $300. So what I also found was like, okay, you can make $300 in one or two trades. And then you start to say, okay, well, my maximum daily goal is $500. So I know that, hey, I'm at my minimum. I'm content with my trading day. Now let me see if I can take the next push for the $500. I'm really big on analogies, man. And I draw my analogies from real world, not necessarily real world experiences I've had, but um, just the real world examples. Like, for instance, where I'm trying to get at is like, you want to climb Mount Everest. And I've been on this huge like Mount Everest kick lately. I'm never going to climb it. My wife would never let me, but I've been on this huge kick about Mount Everest. So, but you don't just get on the mountain. You just, hey, we're ascending, we're going to ascend to the top. Now you move up and then you acclimate and you say, okay, am I good? Can I push higher? And then that's how I look at it is, okay, I made my minimum goal today, $300. How do I feel? Am I ready to push for my maximum on the day? Or did I really struggle to hit that minimum today? And now maybe it's a good time to just have that conversation with myself and say, am I going to walk away from the day? So you may be asking yourself, oh, but you leave a lot on the table, right? By having only a $500 a day goal. Well, I'm usually only trading one contract. I could probably make it a lot faster if I trade more, but again, I'm always wearing that risk manager hat. And so the one thing I start to ask myself is, if I can ascend to that $500, great. But if something starts to happen and I'm not feeling well, and that goes in again using the Mount Everest analogy, is if you're not feeling well, you're not acclimating well, then hey, it's time to just back off. So when I look back at the end of the day, I can say, oh man, I could have made $2,000 today by trading, by to continue to push. But what I also learned is that, hey, in that push for $2,000 that I could have made if I had stayed in the session, more often than not, if I continued to trade, that $500 turned into zero or turned into negative 500. So like I give up larger gains for just consistency. Um, but it's something I'm working at. It's not like, at the end of the day, oh, I'm always going to be at a $500 a day goal. No, eventually I want to push at the, $5,000 and so on and so forth. But again, I'm very big on not trying to get rich quick, just trying to be consistent, trying to grow my account and take it that way. Like you don't get to be on the PGA tour, by hitting bombs. You get to be on the PGA tour by showing up and being consistent. I mean, yeah, I probably hit, because I play golf too. Like I said, I'm a big sports guy. I probably hit a shot that would make Tiger Woods' mouth drop once in my career, but that's not consistency. That's not going to impress him. What would impress, a golfer is, you know, showing up and you're consistent throughout 18 holes of golf, right? You hit that beautiful shot on the first tee and you drive green and you're within 1 foot, and then the rest of the day you're just falling apart. Nobody's really gonna care about that beautiful shot. But if you show up and you play 18 rounds of consistent golf, people are gonna be like, oh man, that guy's good. He's good. So that's kind of like how I do my trading. I just want to be consistent. And when I made that run, it was just about consistency. It wasn't about hitting major big days. It was just about consistency. So
I like it. So the one thing in that, and I got a feeling you probably know where I'm going with this, is so for me, I personally don't like goals when it comes to like a daily goal in trading. Because I think for me mentally, it just kind of it makes me want to press situations or press trades that really aren't there. Um, so is there some sort of fail safe that you have when you start to feel that, or is there how do you so I personally can't do that. If I'm like, hey, I need to make $300 or I want to make $300, either need or want, I end up not hitting that goal for whatever reason mentally in my head. Um,
okay,
so
that's what you mean.
how do you do that?
So and let me go back. So a lot of it is time on the screens and understanding what setups I'm looking for. And I do a lot of sitting on my hands and I'm waiting for particular setups. But also with that said, is I've developed, and it's always a work in progress, but every day I like to like say, how was my discipline today? Like every day when I sit at the screen, I have a goal of making $500, but a bigger goal is I want to have a great discipline session, meaning I only take my trades. I don't take trades that don't meet my criteria. And if I don't meet my criteria on any of these trades, then at the end of my hours trading day, I'm done. And I could be totally cool with saying, "Hey, I didn't take any trades today," but I get an A for discipline.
Okay.
So so yeah, and that's how I do it. Is I don't make 500, every day per account. I did, man, I'd have some huge backers, but but I have the ability to, sit on my hands. And then I also have the ability to say, I'm not feeling it today. Um, I'm going to walk away from the screen. And like I told you earlier, like sometimes you have to hit X's. Have to start hitting X's on closing out your platform, closing out, whatever distractions you may have. Like, but those are the things that I've been working on for years now. It's not something that I think. Let me go back. I think that with the right mentor and the right beginning, it's a lot easier. But for me, it took me a lot more. And this is just my own journey. Each person's gonna have their own journey, their own journey, their own challenges. But I like to know that, hey, if I hit my goal, I'm done. But again, I give up a lot of upside by doing that. It's the yeah, I hit $500, but when you don't have a goal, is you can make a $2,000 day, a $5,000 day. When I've already walked away at $500, but that's just the difference in us as traders. I don't think it's right or wrong. Um, it's just kind of like my journey and my path and how I've gone about it, and it helps me sleep easy. So
I mean, at the end of the day, like the thing is, if it works, then obviously keep doing it. You know what I mean? Like, and I say the same thing too when it comes to um, which I talked about this in like almost every interview so far is like I don't personally use any indicators outside of the divergence indicator, so I don't care about RSI, MACD, all of those things. But if they're working for you and it's consistently producing results, then it's like, okay, I guess keep doing it, right? Once you find that groove, um, continue to do so. I think where a lot of traders struggle is it'll work for a little bit, and then if we go into a little bit of a trend change type of environment, um, they don't have that discipline to sit on hands for the day or for 2 days. or whatever the case is until their trade setup comes about. Um, and what ends up happening, and I'm getting to my question here, is that they end up putting on some type of larger position than what they should have to make back some previous loss. And then we know how that cycle goes is, it's a violent just drop off the cliff in terms of account. So what's been your biggest loss? And then mentally, how did you recover from that? When were you like on your knees praying to the trading gods, like, please make this loss stop? Because we've all been there. Like we've all had that day. So walk us through that trade, through that day, and then how you overcame it.
So I'm going to answer your question. I want to get back on, because you said something. So I'm going to spin it on you. So you said that you don't use indicators. And so one thing that I also didn't, mention earlier, but I think would help people is I actually didn't know I could do this until I found out I could do it. I actually hired somebody to make my own indicator. Right. So I contacted someone who's very bright. He knew how to he was a programmer. And I said, hey, I have an idea for something that's going to help me in my trading. And here's my idea. Can you code this for me? And so it took me a while to even understand, like, hey, like you can have a brilliant idea, something that's going to help you think faster or make a decision based off your trading criteria, that you just got to hire a coder to code for you. And so for me, I have two proprietary indicators that I use, that I contacted a coder who coded for me, that I use every day, that helps me make trading decisions. Also, what helps me make those trading decisions, again, I'll get back to the biggest loss, is the strategies and techniques that you taught me. So I think it was like a week ago, the NASDAQ open, took off, never looked. Right. So I'm just like every other trader.
You just described every day for the last 2 weeks.
I'm like every other trader though. I want to fade the move. Like this is overbought. This is crazy. Look at the president just got arrested. Like, the world's coming to an end. Like, oh, this is a sell, right? But this is like, and again, I'm gonna tell people to get the options mentorship course, because for me, I'm very big on confirmation. Hey, I want to go short. I really want to go short. I really want to fade this move. We are confirming higher. I don't go short. Okay. Oh, the market's getting a little weak here. I really want to short it. Oh, we confirmed higher. I don't go short. I continue to sit on my hands. And that was something that you taught me that I think people can, learn from. I implore everyone to learn that, exactly what I mean by confirmation from you, because a lot of people are sitting here and they're saying, oh, the NASDAQ can't go any higher. The S&Ps can't go any higher. Look at all this bad data. Look at what happened to the president. Look at what's happening in the war in Ukraine. But wait a second, we are confirming higher. So I'm not going short. In fact, I'm going long. So I hope that helps answer a little bit about the indicator portion and, the sitting on hands portion, and going back to my biggest loss. So my biggest loss for me, and I thought you were going to ask this question. So my biggest loss, I think, came early on. And I say that because it wasn't necessarily in the dollar amount, but it was something that changed my trading perspective. And it took me a while to shake this bad behavior, so to speak. So I got a small portion of money when I first started my day trading journey. It was like, I don't know, like $8,000 or something. And within like a week, I had blown it all. And so you have to imagine, like, to me at that point, $8,000 was like $100 million. It was the same thing. It was everything. So it was the biggest loss, because what it also did for me, and why I mentioned the biggest loss, is I lost that money, and it made me a perma bear for like a long time. where I just wanted to go short. I wanted to go short. And the market just kept going higher. It didn't care if there was like nuclear holocaust or whatever came across the market was going higher. And out here I was a perma bear because of that initial loss. So for me, that was the biggest loss because it was a lot of money to me at the time, but it's what it did to my mindset. It made me a perma bear, and I kept on wanting to go short. And man, I would have been the greatest trader ever if I had just gone long. But for whatever reason, like I needed to learn. I needed to learn to break that cycle of being a perma bear, and now being able to go long just as much as I can go short. And so the way I was able to overcome that was just time. It was time, and then self realization that, hey, if I want to make this my career, if I want to make this a long term plan, then I really need to focus on my discipline. And I don't know if you know him, Jocko. You familiar with Jocko?
Yeah.
Um, he talks about discipline equals freedom, right? And he says, and I heard this a long time ago from him, but he says, discipline, it may seem like your worst enemy, but in reality, it's your best friend. So I need to get disciplined to say, hey, I can't be a perma bear anymore. Right? I got to be able to go long. I got to be able to go short. I got to be able to stay neutral and sit on the sidelines. Like until I learned that, until I learned that, I wasn't able to overcome my loss. But,
So,
luckily for me, I found Eric Marcus, and you really helped me with the psychology piece, man. And now it's just like if you the the mentees that you've had who have found success, everyone will say it's the psychology piece. It's psychology. Like my psychology wasn't good because I was a perma bear, right? So it was that psychology piece that I really need to work on and overcome. And that's when
and
things changed.
I'm not paying them to say to give me all the
And I
plugs
wouldn't
either.
I wouldn't say it if it wasn't true, but the difference that I look at when I look at like social media traders is, and kind of like I think we were trying to get this interview together for a while, is you know you and we're like silent killers, right? We don't need to post and say, look at me, look how I'm doing it. you know in the business that I'm in, it's kind of like the loudest one in the room is usually the weakest, right? It's the silent ones you need to look out for. And so for me, it was just like, hey, I kind of just want to just be the silent killer. I don't need, all this, attention or whatever. But the reason why I decided, do the interview and why I talked you up is because I think you have something to offer people. I think you have something that can offer people because there's a lot of people out there who like to show flash, but like I said, sometimes you have to, ask yourself, are they just being loud and they're really weak? Because everyone, like, again, I say it.
I
Yeah.
got I got my stacks of ones. Can I not flash my $100?
No, no, it's really, and that's just a life lesson too. It's the silent ones you need to look out for. Those are like if you talk to people who do jujitsu, right? Like you look at someone who's like, oh man, look at that guy. He's some scrawny little guy. But he's the one who's gonna roll you up in a pretzel.
Yeah.
It's like it's the silent people that I think who are really really putting up the numbers. So.
No, I agree with that for sure. You said something I'm joking about the 100. I keep two stacks of $100 bills right there. And I've done this now for I don't know, probably 8 or 9 years at this point. Like I don't even know if you could tell a date on these, but I have specifically ordered them from the bank, so that they have the wrap and all that, and they're all the same exact serial numbers, like all the way through. So this one starts at 501
Oh,
and goes all the way up on both
that's cool.
stacks. Um, and it really the reason in which I bring this up is that it allows me to visualize the numbers that are on the screen as to actual real money, even though it's only $200 and the numbers on the screen could be bigger or smaller or whatever. it really kind of, you get immune at a certain point to the numbers on the screen. Um, so I say that to say, when you lost that 8 grand, and it made you a perma bear, was that just from the standpoint of like you were blaming the markets and it was like everything needed to like crash and burn at that point to like kind of to see that come back, or what ultimately made that turn you into a perma bear, I guess, was the real question there.
And again, those were really early in my trading career. So I think what ended up happening, if I remember correctly, is I lost the money going long and the market faded me. And I turned into like if I had only been short, and I can't remember what was going on around that time, but um we had a period where the market was making declines. And so I said, man, if I had only gone short, I would never would have lost that money. And again, for me, and kind of why I always say like the space has changed, meaning I didn't really know at that time, hey, what does a professional trader look like? How do they like? What do they do? Like I always thought to show you just my infancy in the career. I thought like, hey, you're not a trader unless you're always trading. Like you trade 6.5 hours a day. You're trading. You know, the money I thought was real. I don't think it was that I didn't think the money was real. But at the time I didn't really respect the. I don't know if you ever. I didn't really respect the risk. I literally thought, and there's a great Paul Tudor Jones quote. If you focus your time on what you can lose rather than having your head in the sky about how much money you're going to make, you'll be better off in this career. There's some documentary that he made in like in the 80s that I think you could probably find on YouTube or something,
Cool.
where he talks about that. And so at that time, I'm young, I'm impressionable, I'm getting into this trading career. Guys have the big house on the beach with the cars. And so I'm like, okay, I'm going to do it. And then it was like the ads, like, you know, I turned $2,000 into $2 million, et cetera. And so you're like, okay, I have 8 grand, I can do this. And then you put on a trade and you're up like $500. And you're like, okay, I knew it. I'm the one. I'm God's, gift to trading. And then you put on another trade, I probably made like another $200. I'm like, yep, it's time to increase size. And then boom, I got blown out and I lost that account. And so for me, like that's why I said it wasn't like necessarily the dollar amount in loss. It was more so what it did to me and what I had to overcome to get back to where I'm at and now on the ascent, higher. It made me a perma bear. And like I told you earlier, it's like the market it took off, man. It took off and it never looked back. And I kept trying to short, kept hitting stop loss, and that was one thing I had to overcome. But for anyone out there in that same situation, you know, and that's kind of why I said earlier I would get like when we were talking about Apex, is I would like get like the bigger account because in my opinion, you'll be less likely to like YOLO into like, I'm gonna just trade max size, I'm gonna hit this one trade, I'm gonna get my account. Like, no, just like trade micros. And now you don't have the pressure of like, okay, I've gotta pass this evaluation like right now. Like just your goal is just to make it to, and then again, if you want to use my strategy, make it to the next quarter, right? And then at the end of the game's done. And I look back because when I brought up my quarter analogy, I was going to talk to you about this, but I completely slipped my mind. But if you watch the most recent NBA championship game, Denver versus Miami, the last game, right? And it goes into like my whole conversation about consistency, about, the quarter system that I'm trying to, share with people is that the first 2 quarters, Denver was down. They were down. They were losing the ball game, right? But if you look at what and this was just something I was like, oh, let me see, like if I can play into like trying to really get people to wrap their minds around this. I forgot about it, but they were like consistently scoring 24, 22 points each quarter. It was if you look at it, it will blow your mind. They were just very consistent. They weren't like, oh, we're going to put up 30 in quarter one, 40 in quarter two, and then drop off and put up 20 and 10. They were very like 22 points, 22 points, 24 points, 20 whatever, and then they win the ball game. And just very consistent. Just we're going to play our game. We're going to stick to what we know. We're not going to have volatile swings. We're just going to be very consistent, and they win the ball game. But it goes to show that, like, hey, you can be down in quarter one. I could put my first trade on in the day, and I could be down, like, a couple $100. And then I'm like, okay, well, I just want to make it to quarter two. Quarter two, I lose a couple $100. I might say, that's a ball game. I'm going to call it here. But my goal each day is just to be consistent, just consistent trading. I'm not trying to hit home runs, which is like, for me, like when I trade, like you teach the level move. Like if I catch a level move, that's like a home run. It's an absolute home run for me. And there's nothing wrong with that, but you should get it on like trailing size. Like, you're trailing to a level move. You shouldn't be holding, in my opinion, unless you have absolute conviction, full size up to a level move. But, it just comes with time and experience. And those are the things that I'm trying to work on, being able to hold my position for a level to level move. I don't think I'm there yet. I want to tell you I'm there yet. But each trader needs to have some things that they're consistently working on in their game, and that's the thing I'm working on in my game. I don't think I'm the best yet, but each day I try and get just 1% better. I don't try and get 10% better. I don't try and get, 5% better. I just want to get 1% better today than I was yesterday. Whether that's in my discipline, in my risk management, in my hold times, in my trades. Like if I'm taking a trade that's not in my trading plan, like something's wrong. Like I got to really address that. Like, why did I enter in the market here when that was not in my trading plan? And I did that last week. I entered a trade. I ended up having a winning day, but I took a trade that was like, dude, like this was not in my trading plan. And then I was like, okay, self, like what's going on here? And I said, I had FOMO. I totally had FOMO. Like I was like, okay, but until you're at that point where you can self-diagnose that, okay, I had FOMO right there. That's why I took that trade. I would just tell people like, hey, like, go with those bigger accounts and just try and be consistent and learn the skills, because it's the long haul that we're all after.
I agree. Like I always say, trading is a marathon. It's not a sprint. And it's very much true. And I personally I'm not a runner. I don't sprint or run marathons at all, but the analogy fits. It's very much true. I mean, this next year or next month will be 12 years full time for me. And I kind of look at it and I'm like, I was going through the mentorship the other night and I went back and I found screenshots from 2013 and 2016, of divergence trades and things like that. And I look back on it and I'm like, man, that actually, it doesn't feel like that was a decade ago. Like it goes by way quicker than you think it actually does. Like it's kind of crazy. So.
And I would even jump on that, just since you brought it up. One thing I also like to do, and I tell people, if you really are serious about this, is it takes no time to, after you exit your trade, whether it's win, a lose, a break even, take a screenshot of that trade and like create a folder. Winning trades folder, break even trade folder, losing trade folder, and throw them in there. And just, you can just use the Thinkorswim tools to like plot arrows, and when you get entered or you exit, you can write a couple quick notes. But then it's just like now you have, in the course of a week, you can have some really solid data. In the course of a month, you have more data. And again, it takes no time just to hit a snipping tool and say, now you're doing your weekend, just trade recap, you're looking through your folders, you're like, okay, wait, I'm starting to see a pattern here. Like when you have confirmation above a level with a buy setup, I get long and these are winning trades. But wait a second, the candle prior normally looked, and before the buy setup, looked like this. Like it closed in the bottom 90% of its body, or the wick. The body closed in the 90% of the bottom. I'm getting tongue twisted here. The candle closed in the bottom 90% of its range, and then we had a buy setup, and then the price went up, and you're like, okay, wait a second, let me go back and look at my other winning trades. Wait, I'm seeing the same thing versus a buy setup where the candle closed in the top, like call it 25% of its range, and then the buy setup went in, triggered, and you're like, wait a second, these are more like break-even trades, and it's just like pattern recognition. That's what I've been really good at, pattern and candlestick recognition. I also I added a couple of filters for me as between the other proprietary indicators that I had someone make for me. I also use just basic moving averages that helps me, for more than anything, it keeps me out of trades. It keeps me out of trades that I don't want to participate in. Because for me, I want my trades to be, above a level with confirmation, with the candlestick pattern, with in a long example, like with a buy setup, or in a short example with the sell setup, above the averages, with a target, like a level above that I can target. Those are like my ideal trades. So, but how do I know that? Because I have the data. I've looked at all the winning trades. I've seen what the losing trades look like. But it takes no time. It's just effort. That's all it is, to take screenshots of your trades. It's just efforts. So that's something I would tell people who really want to take their trading to the next level to do.
Fair enough. I think we leave it there. We end on the note there, and I couldn't agree more. I want to thank you for your time as always, and it's been fun. We got to chat it up. It's been almost 2 hours now that we've been sitting here chatting it up, so it's been good. I appreciate you. If you guys are watching still to the end of this video here on YouTube, I want to thank you guys so much. I will drop any links, descriptions, ways to get a hold of you, any and all that stuff in the description below. As always, give us a thumbs up on this video if you did enjoy it, and leave a comment if you have any questions for Adrian, you want to see some follow-ups, or anything, I guess. I don't really know. Fair enough. Well, I appreciate it, sir, and we will catch you guys on the next video. Peace.